And welcome to my more important analysis videos on Wednesday, the 22nd of November with me, Rich Paramark, analyst at Hantec Markets. We've got a sort of fairly dollar negative outlook on the market today as the dollar index has just fallen back again. We've seen comments from Janet Yellen yesterday which suggested that premature raising of interest rates or raising interest rates too quickly would have a damaging impact on inflation expectations potentially going forward. So subsequently, the dollar has sort of been hit this morning. Just a mild shift against the dollar, nothing too significant. Now it's interesting that the yen is outperforming. So the yen is pulling dollar yen lower, and that yen strength has come as sort of suggestions that again that the Bank of Japan are beginning to give increasing signs of being less dovish. Just a sort of very early moves, and communication from central banks is always sort of keenly sort of poured over and sometimes gotten wrong. But certainly a suggestion is that the Bank of Japan is becoming less or more concerned about the longer term impact of easy monetary policy or ultra easy monetary policy, which might lead to a raising of the yield curve control. So that's had an impact on the yen this morning, but generally speaking, the dollar is the key mover, which is to the downside. Equity markets fairly mixed in the European session. Interesting that the Wall Street markets pushed strongly higher overnight, and also we had some decent gains in Asian markets, but DAX after 2 days of strong gains is underperforming a touch. FTSE slightly higher. We've got the UK budget today, which is the key sort of UK side bit of data this morning. That's at 12:30, and then you've got a whole clutch of sort of lower or second tier US data. We've got core durable goods, we've got weekly jobs claims, Michigan sentiment, revised Michigan sentiment, and then we're sort of looking out towards the Fed meeting minutes tonight. But the durable goods for the States on an ex-transport basis, which is the core data, 0.5% plus on the month. Weekly jobless claims 240, basically sort of 230 towards 250 is generally seen as sort of fairly neutral on that jobless claims. Michigan sentiment very mildly upwardly revised to 98 from 97 at spot 8 at 3 o'clock. And then we look at the weekly crude oil inventories. Watch out for those, because the API oil inventories last night showed a larger than expected inventory drawdown on the crude stock. So that 2.2% negative could be larger than that, so watch out for that. That would be oil supportive. We have seen oil markets push out to multi-year highs on the WTI this morning, although it's just pulled back slightly latterly. And then later on this evening or this afternoon at 7 o'clock UK time, the Fed meeting minutes are announced. Now the market is going to take a little bit more judgment, I think, on these Fed meeting minutes, because we didn't have a press conference last time, and you sort of read more into the minutes in those sort of meetings. So we're sort of not really expecting any real great shakes about a December hike, which is all but guaranteed. I mean, it's pretty much nailed on. But the market will be looking out for sort of expectations of future rate hikes, especially given the comments from Janet Yellen last night about the impact of hiking rates too fast and having impact on inflation expectations. That's something that I think the market could now be looking out for. So my chart of the day is Euro Kiwi. Now, I sort of looked at Euro Kiwi a while ago and sort of talked about this uptrend channel being strong, but there is a potential now for a reversal within that trend channel. A small top pattern is beginning to sort of possibly develop. 71.15. The market sort of had a look at it this morning, 71.36, but bounced, and is now sort of around about 100 ticks away from that support. But I think there is something in this potentially, certainly with the MACD lines. With the stochastics crossing over, that's sort of both times that happened in October. We saw the market correcting fairly strongly. Following on from that, haven't had a confirmation of the signal yet. You need the lines crossing back below 80, but the RSI is still above 60. If the RSI went below 60 again, that would be sort of a suggestion that this market is just topping out near term, so rolling over potentially. So looking on the hourly chart, you can see this top pattern in better detail. We've had a bit of a rebound today, which has just, as I said, pulled away from that neckline at 71.15. But you'd now sort of be looking out for this resistance 72.97, or I suppose 73, big figure, really, that needs to be broken in order to sort of turn this market around sustainably. Because you look at the hourly MACD lines, failed at 60 yesterday. Will they fail again at 60? Hourly MACD, hourly RSI, that was. Hourly MACD lines crossed lower at neutral. Will they sort of fail again at neutral? Yeah, so I think this is one to watch now, near term, and certainly if the market just starts to drop away again this morning, there could be something in this potential top pattern. So I wish you good luck in your trading, and I will speak to you later. Thank you.